Hi, my name is John Dowdy, and I'd like to give you a market review for the week ending June 7th, 2013. During this week, we bounced off the 50-day moving average, and I will talk about that in much more detail. If you'd like more data after viewing this video, please come to my website, www.superchargedretirementIncome.com. Last week, we predicted that we would have at least a 5% correction over the next few days or maybe weeks. The reason we made that correction is that we looked at past data, and since 1950, there have been 9 times that the first quarter gained over 10%. That's what we did this year. And in all 9 of those cases, there was at least one 5% correction before the end of the year. Now, last week we had started a pullback, so it looked like that could potentially be the start of the 5% correction, and it was. So that was achieved last week. The good news now is that in all the cases where we did gain over 10% in the first quarter, except for 1987, which was the market crashed, as you remember, in October, the rest of the year resulted in more gains. So the probabilities have now shifted that we will gain for the rest of the year. Let's look at the SPY, which is the S&P 500 ETF, to get a better idea of what the market's doing. As we see, we're in a green trend channels. We've been there since November. A few weeks ago, we broke out to a brand new high. Had a throwback to the top of the channel, which is fairly usual. Bounced off that throwback, looked like that was going to be a nice bounce, but then collapsed. We collapsed all the way down to the 50-day moving average, and on Thursday, we went below that moving average and then had a tremendous reversal and moved back up and closed the day positive. And on Friday, we're off to the races as we gained over 200 points on the Dow. So a very, very positive Friday. Now we're back in the middle of the channel, and the bull is still very strong. As long as we stay above this low point, which was 160.25 on the SPY, then we're still in the bull market. And expectations are now that we will move at least to the top of the channel, up around 167, 168, and most likely challenge this brand new high and potentially go all the way to about 170 before we hit significant resistance. We'll have to see what the market tells us. So, in summary, the market reached its correction target and bounced strongly. We bounced off the 50-day moving average with a vengeance. The S&P closed at 164.80, which is in the middle of the channel, and we will remain in that bull market unless we move below 160.25. So you can rest easy unless we move below 160.25. And as we stay above that, then the expectation is that we'll move up to 167 or to 170 over the next few days or weeks. So the advice, maintain a bullish stance, but watch the price action. Do not try to speculate or anticipate. Watch the price action and let the price action be your guide. But you should give the benefit of the doubt to the bull as long as the Fed keeps up the quantitative easing. A quick legal disclaimer. This video is for informational purposes only and should not be construed as any investment advice. You are the ones responsible for your investment decisions, and anytime you make an investment, there is a probability of loss. And of course, past performance does not negate any future profits. So good luck on the next week. Thank you for viewing. And as I said, if you'd like to get more data, we have a lot of articles at www.superchargedretirementIncome.com.